Hello, traders. It's 8:04 a.m. Chicago time on Wednesday, the 19th of February, 2020. Thanks for joining me today. Sorry about the delay in getting started. Had a hard time getting this broadcasting software to go. I want to remind everyone that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1695. This morning, overall, the market is looking higher. Risk on crude is taking a pop higher at trading at 53.13, up 82 cents, 1.57%. The DAX also leading higher at up 91 and a half points or 0.67%. The laggards, the yen today, followed by the bonds. U.S. bonds are down 10 ticks. Gold's up $2.90. Gold over the 1600 hurdle. Century figure trading at 1606.50, up 0.17%. This morning we did get some key figures. We got the inflation rate year on year from Great Britain came in at 1.8%, higher than 1.4% expected. Inflation rate out of Canada also came out at 2.4%, higher than the 2.3%. The U.S. markets did see several numbers, housing starts, building permits, and PPI all coming in stronger than expected. And then what's left for the day is the Fed's Kashkari at 11:45, Fed's Kaplan at 1:30 Eastern, and then the FOMC minutes at 2. An important release, likely to see a reaction from the market, and then Fed's Barkin at 4:30 Eastern. This evening, China releases its loan prime rate at 8:30 p.m. Of course, the ECB is still holding its non-monetary policy meeting. So overall, that's what's on deck. You just need to pay attention to, these Fed speakers have not been moving anything because the market's so in tune with what's going on, and it's all telegraphed anyway. Do look out for the FOMC minutes at 2 p.m. Eastern, though. Let's shift gears into review and look at what was expected yesterday. Markets running up a little bit right now. Yesterday, we basically played out scenario one very, very well. Remember, I pointed out this 74.50 area with an X there. That's a key area for in terms of resistance on responsive buying. And then I pointed out 60 as a key area of potential support that ended up failing, but we ended up finishing up in the range anyway. So here's what actually happened. Here's what actually happened. We pushed into 74.50 as expected, pushed down into the 60 right in here, and then slipped through to 55, came back, retested, and then finished in the middle of the range, as you see here. What we had yesterday is basically, for pattern traders, this is kind of an inverted head and shoulders short-term intraday. And the neckline is a key area, which is that 74.50, 75. And now we're higher. So the head and shoulders pattern looks something like this. There's your left side. That could be the shoulder or not, or this could be the shoulder, the neckline. There it is, like that, and then pushing higher. So this could be the neckline right here, or this could be the neckline. In my opinion, the 74.50 is a bigger neckline if you're a pattern trader. Not sure why these are up here. They should be down here. Anyway, so that's what we got yesterday. Basically, scenario one with a push below the 60 to 55. The rest of it's pretty much in line. From there, the overnight session. So yesterday was a neutral day, another neutral day. And then from there, we basically opened and pushed immediately higher. and held above the close the entire session. Overnight inventories long on what is basically a P-shaped profile and looks incomplete to me. It appears to be incomplete to me to the upside. If we look at the pullback here, the pullback occurred right at the European Open, European Cash Open around 2 o'clock, and we've been holding steady since. Here we are attacking that high again. The high overnight's 82. We're trading at 81 and a quarter, 81 and a half currently. So looks kind of bullish to me. Looks like a short squeeze day. If you're short, you might want to put some hedges on or lighten up. The delta's relatively strong. One of the things I didn't point out about yesterday is as the market was holding steady here sideways through this area into the close, look at this buying that took place. There was quite a bit of buying there on the close. Let me clear this up so you could see that it's the price action was sideways, but the delta was pretty strong. And that really is an interesting way to finish the day. The volume was pretty good on the close. Again, that's a pretty interesting buying into the close. We don't see that very often. In terms of um, in terms of order flow overnight, let me zoom out. Here's the reopen. Pretty pretty quiet overall at the very beginning in the Asian session with an upward skew, and then and then it's just scattered. We see a lot of ping ponging around, size coming in and out, and it's quite noisy. Not liking the way the order flow is setting up. It seems like the market is stacked up near the all-time highs into the 90, which is the next key target up. Um, Next key target up, we are not far from all-time highs here. 84.75 is the all-time high. And you can see there's a bit of an offer there. And then above there, it's I can't say it's well offered really. It's got some liquidity up there, but to me, this price action really says that it's likely to squeeze into these areas up into the 90. That's my expectation for the day and basically the primary scenario. So that's where we are in terms of order flow and what's up there. Beyond that, of course, beyond the 90, we have some size up in the 3400s. But this area just above us is pretty crowded. I anticipate that we are likely to go and take out that 84.75 today. It's well within range. Okay. Turning our attention to the current session and what we're looking for. So primary scenario, open. We have a gap open. Let me extend this out. The point of control for this MC moved down to 73. We have a gap on the open. I'm expecting it to push down into the 79-ish, but then squeeze up, take out the 84.75, pull back, consolidate in that area, and then squeeze into that 90, consolidate, and continue to push. I'm expecting a pretty low volatility grind up today. Kind of a classic for the last year or so since the tax cuts. Um, it's just, you know, it's just fun. The secondary is an open auction that pushes to the high, consolidates, pushes higher, impulses down back to the open, consolidates, and starts to move towards that 75 and finishes somewhere in the range for a new all-time high balancing day. So overall, we would get the kind of action we saw here on this all-time high. The market tends to go into a selling spree right after putting in a new all-time high, but oftentimes it's doing it on a decent push. So I would not suggest that's not to suggest that we would not continue to squeeze higher. We don't know the extent of the move higher. So those are the two key scenarios for today. We are in a gap. So scenario 3, open test down, and then initiative buying with the gap. That is a scenario that we do not want to fade. Open, small test, drive on an impulse and squeeze. And in that scenario, we have 3,400 as the figure up above. 3,400, 3,403 as the next key area up above the 90. So that's where we stand today. Hopefully you are being patient. Hopefully you are sitting steady. This is, you know, this is a market that's it's been interesting, that's for sure. And in an election year, who knows what's going to come next? But overall, this is our job is to come in here and put our foot down on the gas when we see an edge, when we have an edge that's working for us, and then learn to back off and just coast when there's nothing there. Make sure you keep your bet sizing, meaning your stops, small enough to sustain a streak of losses, and make sure that you're not over trading given the chop that we often see in this market. Okay, good luck, and I'll catch you tomorrow. Take care.